Welcome back. We're likely to see the much-awaited national logistics policy being released later this Friday. The policy aims to lower logistics costs in line with global standards through a comprehensive action plan and greater use of digitization and automation. I mean, this is going to be much awaited in terms of what it can do to provide a fillip to the sector. Logistics costs, as companies across the board have consistently told us over the years, is an important metric which needs to be brought down, brought lower. We've got an important company, maybe one of the leaders in that space, Allcargo Logistics. Ravi Jakhar is Chief Strategy Officer of the company. He's joining us right now to take some questions. Ravi, great to have you with us here. Thank you very much for your time. Could you tell us, I mean, how are you looking at this much-awaited policy which will be out tomorrow? And what do you hope to see as part of the policy in terms of actionable items?
Yeah, so I think, we are very hopeful and very confident that this logistics policy which is being rolled out could perhaps be the defining moment in the Indian logistics industry. And why I carry such optimism is based upon what we have seen from this government. You talk about UPI and the way the government created the whole platform and brought all the stakeholders together, or the more recent open network digital commerce, where logistics also plays a role, but it's largely about creating an ecosystem and bringing the buyers and sellers together. I think this national logistics policy is going to be a key enabler of strategic confluence in the logistics industry, bringing along all the stakeholders, wherein the government is defining policy and building out a platform. And the best part about this policy is it carries a very holistic approach. It's not just limited to saying that, certain kilometers of roads would be built or something XYZ would be done. It takes a very holistic view that the logistics as an industry is an enabler of economic growth, for trade competitiveness, for increasing the exports in the country, for driving domestic growth. For anything, logistics has to be efficient for the business and industry to be competitive. And in this regard, the government has laid out a very clear framework. And of course, we would only know tomorrow when the policy gets unveiled. But if you look at the discussions which the government has had with various stakeholders, it appears that there's a comprehensive view on infrastructure, which is the starting point. You need to enable logistics only by providing world-class infrastructure and then enabling that with technology. And whatever we have seen so far of various drafts which have been put up in public domain, it appears that the thinking is going to be about providing complete transparency and visibility around logistics assets. And if the government can incentivize creation of infrastructure on an expedited way, we have seen the kind of impact which is being forecasted with one or two dedicated freight corridors which are coming up. If the government can truly multiply the efforts under this national logistics policy and roll out a much improved highway network, a much improved railway network, and then digitize the entire asset base, providing transparency and visibility, I think this could be a paradigm shift in the way logistics is organized in the country. We could see much more use of technology. And on the other point, if I look at the logistics policy, I think there's a huge impetus on the sustainability as well. And on one hand, when we are taking climate change goals, where the Honorable Prime Minister has been talking about very bold ambitions from the country, logistics and transport is an important contributor to the carbon footprint. And therefore, it is quite important that any such policy which gets rolled out talks about reducing the carbon footprint as well.
Sure.
And whatever, again, we've seen, it seems to be all right. Yeah.
Got that. So that is on the national logistics policy. But I just want to talk a little bit about your own company, because at the analyst meeting, you gave some aggressive targets for revenues. You spoke about a 25,000 to 30,000 crore revenue target by FY26. That's quite a wide range. So just wanted to understand, what are the immediate targets that you're looking at and how do you plan to achieve it?
Yeah, so I think, we have been building our business growth very robustly across the last 3-4 years. And, the variables which remain beyond our control are how the markets behave. We are forecasting and assuming in our assumptions that perhaps we see 12 to 18 months of subdued growth, given the recessionary environment across the world. And then we see a bounce back over the remaining 18 to 24 months if you look at the next 3 years. So that's the reason why some of these, factors are beyond our control. And with so many businesses in our segment, when we put them together, we try to be, more cautious, and therefore a broad range of numbers that we have given out as the management aspirations. And we are quite confident on the management side that we should continue to pursue the growth strategy that we have embarked upon over the last 2-3 years. And we see that the momentum should sustain. Naturally, we are not completely immune to the global macroeconomic environments. But the way the businesses are structured, I would say there's a significant amount of inbuilt hedge in our businesses, and that gives us the confidence to sustain the momentum that we have built over the last few quarters.
So in FY22, you ended with about 20,000 crores of revenues. Even if you look at a 15% growth, it's 23,000 crores by FY23. Is that a logical estimate, or could you do better than that?
So I would say, in our business, some of the costs, such as the ocean freight, is a pass-through cost, and therefore revenue may not be the right indicator. But if you look at the gross margins, or if you look at, the EBITDA numbers on absolute terms, that would be a right indicator. And depending upon the market growth, we could grow significantly from here, or if there's a contraction or recession in terms of the growth on the trade side, we would still largely hold on to the performance that we have demonstrated.
Right, Ravi. Just on the shipping side, spot freight rates have come off very quite dramatically, and one is starting to hear for the first time shipping liners asking for lower, negotiating at least lower contract rates as well. Could you talk to us if you're seeing that, and what implication does that have for your business?
Yeah, so we have also been noticing that, the spot rates have declined tremendously starting from May. And particularly over the last 6 weeks, we have seen significant decline in the spot ocean freight rates. And as you would know, the contractual rates are very different on which most of the larger companies, such as ourselves, work. But clearly, there are two things which we can see from here. One, if you compare to the last year, we saw a significant momentum in terms of pickup on volumes ahead of the festive season. The current year does not have that kind of, momentum. There are certain countries in Western Europe which rather have seen pressure on volumes. And while US has seen, 3% increase in the imports in the month of July, overall the environment is not as bullish in terms of the festive ramp-up as we saw last year. And that is the reason why we see a significant decline in these spot freight rates. From our business standpoint, our ability to contract at reduced rates would allow us to pass on the benefit to the end consumers, and that should basically facilitate the trade. And the inflation has put a bit of a negative pressure. If the freight rates continue to come down, that should allow the trade to be more competitive, and that should perhaps contribute to the world trade growth. And as a company, we would stand to benefit from that.
I wanted a little bit to talk about the multimodal transport operations business. In the quarter gone by, it was a good 70% growth that you saw on a year-on-year basis. But just wanted to understand, what is a sustainable quarterly run rate that you can look at in the MTO business? Is it 5,000 crores per quarter that you can at least hold on to?
So I would say that, like I said, the revenue is something which depends on the freight rates. So if freight rates go down, we could see, a marginal 10 to 15% decline on that as well, which then gets compensated by the same volume growth. So the current numbers of about 5,000 crores could remain sustained. The gross margins would not see a downward journey, even if the ocean freight rates were to go down and the revenue was to go down. So I would say at the gross margin level, the performance is largely sustainable, with only minor impact possible. On the revenue side, there could be fluctuations depending on how the freight rates operate.
Okay, we'll leave it at that then. Thanks a lot for joining in. The stock has done phenomenally well, and that's the management talking about not just the demerger, but also